Orbital also out with results today, with the industrial company delivering profit at the top end of guidance as it takes its engine model into production after signing new defence deals in Singapore and Australia. To tell us more, we're joined by Chief Executive Todd Alder. Todd, welcome to AusBiz.
Thanks for the invitation.
We'd love to hear first up about these two recent deals that were signed earlier this year and what that means for Orbital.
The two recent deals are with a Singapore defence organisation, one of the largest, and also with Northrop Grumman, a $1 billion US defence company. They come on the back of a long-term supply agreement we have with Boeing in situ, and that agreement is to supply Boeing in situ with all their engines for their defence drones.
So Todd, let's just go back a step. When it comes to the company, give us a little bit of insight as to what the products or services that you offer and how have you managed to go and come up with a result today? Obviously, shareholders are enjoying it to date.
Yeah, it's been 3 years of some decent work. We used to be a reasonably well-known engineering company. We've, over the last 3 years, transitioned into a not only engineer, but a aerospace manufacturer. So that, again, as I said, was on the back of a contract with Boeing in situ. We design, develop, manufacture and ship engines for military drones. We have a particular special technology that enables our engines to run roughly 10 times as long as the others and are the leading engine for reliability in their class. So with engines now going into production, we're receiving some additional momentum from some of the business development work we're doing with other US defence companies. And as you said, we were pleased to announce the 33.8 million revenue and profit, and looking forward to delivering against the growth of 40 to 50 million for this financial year.
Todd, there are certainly lots of opportunities out there in the defence world at the moment with defence spending pretty high. But are there any ideas to move sideways into the consumer space now that drones are becoming something that's becoming much more widely used and applicable in many areas of everyday pedestrian activity?
Yeah, look, no, our focus is definitely on defence, and in defence we build a very high value product, very suited to defence. So our strategy will be maintained in the defence sector.
You've signed a couple of contracts already. What is the customer pipeline looking like? I could gather it's probably not looking too bad given what's seen around the world at the moment.
Yeah, look, this geopolitical environment suits our business, as does the Australian government's initiative around the 2020 defence paper. We're happy to support where we can, and obviously the unmanned space is a technology that's proving its worth in the defence sector, and we're happy to power that.
In many areas we're seeing companies and people become a bit more nationalistic and move away from globalisation. Is that something we're seeing in your area as well, or is it still very easy to strike up deals on the basis of best technology, best partnership, best fit with competitors and potential partners overseas?
Yeah, so there's definitely the business development opportunities, so definitely with the allied forces. So we have a focus with the US and Australia, etc. But we also have to manage on that global aspect that you're talking about, and in COVID-19 times, we also have to manage a global supply chain and logistics. So we have 40% of our suppliers in the US, 40% in Australia, and 20% in Europe. So where we can, we're looking to develop Australian suppliers to support our own growth.
Todd, in this space, there's a lot of technology, as obviously it costs money to go and do. So what are costs like for your business at the moment?
Yeah, so we like to tell the investors trying to maintain our overheads at 13 to 14 million. We have a gross margin target of around 40%. That 13 to 14 million in overheads includes an allocation to our ongoing R&D, and should see us through to 60, 70 million. We'll be able to maintain that 13 to 14 million in overheads.
Let's talk a bit more about the manufacturing scene here in Australia, if we could. Certainly went through a demise a couple of decades ago. There's certainly moves to try and bring it back. People talking about moving to more smart manufacturing rather than just mass production. What does it look like from your vantage point?
Yeah, we like the more cohesive strategy from the Australian government, so focusing on areas where we have either competitive advantage or it is strategically important. So obviously that's where Orbital falls in, the Australian government's 2020 defence paper and initiatives around defence spending. I think 270 billion over the next number of years, and up to around 2 billion in airspace. So as I said before, we look to be involved in that and support where we can.
So Todd, there's a lot of tailwinds for the company. Over the next 12 months, where is the biggest challenge lie for you?
I think obviously COVID-19 presents challenges for all of us. So that is supply chain and logistics. I think we have a very good product and a significant competitive advantage. So really our focus is around making sure that the growth that we have ahead of us, we can execute on. And so the biggest challenge is supply chain and logistics challenges. And in that regard, we're investing a little more heavily than we probably would have otherwise would to make sure that that doesn't interrupt our production and growth targets.
Todd Alder from Orbital, thank you so much for your time today. Enjoy your weekend.
Really appreciate it. Thank you.